Good afternoon, everybody. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. I am out of that Ion Q short from yesterday. Did well with that at the open. I kept some Uber long and some Apple long. I got out of my AVGO long. I got stopped out of it into the close. Let's talk about it. There's a common saying in martial arts competition. It really actually stems more from the jiu-jitsu guys. You either win or you learn. And to be honest, I always hated that expression. Because if I was going to compete, I compete to win. I'll learn in the gym. That was really always my thought process. Today for me is a day where I certainly didn't win. So we got to try to figure out if I can learn some lessons from it. But let's start with our recap of the market. SPYs are down 0.3%. Qs are down 0.9%. Looks like we're trading a good bit lower from where we closed immediately after the close. That's including after hours action. And the IWM finished green on the day, though selling off a little bit after hours as well to be flat-ish. I'm not concerned about the indexes from today's candle. It's looking a little bit worse right now after hours and how we actually closed. But I pretty much called this perfectly in the meeting today. I just wish I listened to myself, and that's part of what's grinding my gears this morning, or I should say this afternoon. We had a massive day yesterday, right? And we are up huge off the low from a few trading sessions ago. To give back a percentage of the intraday price action from yesterday, not even all of it, but just a percentage of it, not even including the gap up from yesterday, is no big deal at all. Today's candle does not change the message of the market in any way, which still, as much as my thought process has tried to get more bullish, the technicals here on our small to intermediate time frame are pretty neutral at this point until we're actually able to break up. And then the big picture trend is still higher. So intermediate picture, neutral, small picture, neutral, big picture, bullish would mean everything else kind of held equal, which it never is, to err to the side of being long now rather than being short, which is very different than what I had been saying the last several weeks. Really ever since mid-December, I've been saying the opposite. Better to err on the side of being short than being long. So I did think that yesterday was a bit of a game changer, as long as we continue to hold the low from 8:30 a.m. yesterday, which we are still well above. So a little bit of a pullback during the day today, giving back a percentage of yesterday's gains. Not a big deal at all, though we are getting hit further here after hours as I'm kind of chatting. With that said, the morning meeting today, I like to think I nailed it. I nailed the morning meeting, nailed the preparation, totally failed on the execution. But I said in the morning meeting today was just not a day to push it. My expectation for today's trading session, based on my analysis, was difficult, choppy price action with nothing really new to do. That we are significantly more bullish than we were, but that this market needs to digest this huge move that it just had from SPY 575 to SPY 595 in 3 trading sessions. It just makes sense that even if we are going to continue, that we would just have a pause, that we would chop around, that we would reset up, and then the reset up would be the opportunity to really trade and execute. So I said, let's avoid the indexes. Let's avoid things that are highly correlated to the indexes. Maybe we can find some other stuff that moves real big. Maybe the quantum names come back in play. They never really triggered back to my levels to kind of get back involved in them, unfortunately. So it just left me with, like, the right thing to do today would be to have done a whole lot of nothing, in my opinion. And then when we were kind of going through our usual suspects in the morning meeting, reviewing all the Mag 7 names, the one stock I said in particular of all the Mag 7 names to really avoid buying was Apple. Like, I'm like, all right, the market's gotten a lot more bullish, but this Apple looks like crapple, and there is just not. This is just not the name to buy. It's got some of the worst technicals out there. If we're gonna buy anything, buy Amazon, which obviously wasn't great either because the Q sold back down. Or potentially buy Google, but Google had some bad news this morning, so I said let's not buy Google today. Actually, Google seemed relatively unaffected by that news that came out this morning. Like let's focus on those names that have been holding better, that are above support levels if we're going to buy anything. But really, we should just wait a day or two up here. Probably wait till early next week when we get through OPEX. Let the market digest these really big gains, give us a new setup, and then we can go after the longs. I didn't do any of that. I was unnecessarily aggressive in looking for continuation in certain stocks. So I did try to give myself a read through on this TSM earnings that came through. So maybe not to be overly harsh on myself. If I was going to try to trade anything to the long side, it did make a little bit of sense to go after some of these secondary plays off of the TSM news, some of these semiconductors. So I did trade some NVIDIA to the long side this morning, really just looking at this name as like a upside continuation trade early on in the day. I actually traded it pretty well. So even though this trade failed, I finished small green in it. AVGO, another one, potential secondary trade off TSM. I thought that this looked really good versus 230. I paid up a decent amount on probably a little bit too much size versus that 230. I got stopped out of it basically into the close when it broke through this 230 into the close when the market was puking out into the close. So, again, there's some justification there that these names are not going to be as correlated to the market because they're trading as a secondary to TSM. So it's not necessarily the end of the world to go after things that could potentially be in play, even if I did it too aggressively because I couldn't think that the market was going to be on my side. Even if AVGO and NVIDIA are going to be in play as secondaries to TSM, you still want the market to be supporting you. You still don't want to be buying any stocks really in the face of a potentially weak market. Not that I was expecting a weak market. I was expecting more sideways chop, which is still what we got, though the Qs were very relatively weak intraday today. And then I went after this Apple, which was just really not good. I went after this Apple, which was the one stock in the daily chart that I said I should not buy, in a market that I also said is not ready for me to buy. I went after it, and on top of that, I traded it terribly. I really did. I mismanaged my position on several occasions. I had opportunities to take off stock, reduce risk, book profit in certain areas that I did not do. Really did not do a good job following my game plan. Was messing around with some tier size stuff at a certain point that doesn't matter. That it cost me like a bunch of little extra money on top of the loss that I was already taking. So I just traded it really poorly. And then at a certain point, I cleaned up how I traded it, even though at that point I was already in it. Finally, when this thing got down to like 230, I did actually liquidate a good percentage of my position for a loss just to kind of reassess the game plan, because what I was doing up until that time was really not trading it with a game plan. I wasn't trading it properly. Like I said, I was mismanaging it. I was just kind of randomly buying and randomly adding stock in certain areas. I never really trade like that, and I don't know why I all of a sudden decided to do it today. But just kind of randomly like buying a bunch of extra stock to see if I could bail myself out of a loss. It's just not the right way to trade. The right way to trade is to have a game plan where you can understand and manage your risk and manage your reward and develop consistency off of it. So I got a little mad at myself around 11:30-ish today, and I was like, all right, I need to stop being stupid here. Liquidated probably half my size just for like a nice outright loss. Didn't care that it was downside extended. Didn't care about anything. I just wasn't trading it right. And then I said to myself, all right, given where the stock is currently trading, what is the appropriate game plan that I should be implementing on it? And then from that point forward, I started trading it better, but it didn't make the stock less of a piece of a crap. It obviously continued to go down. So even though I started to trade it better, my loss got bigger. It would have been significantly worse actually if I had I not taken that step back when it got to 230 and liquidated some of the position and said, hey, you got to start trading properly here and trading correctly, which is what I eventually did. But I certainly threw a whole bunch of extra money in the garbage on top of a trade that I should not have been involved in at all, to begin with, based on everything that I said in the morning meeting today, from an analysis of both the Apple chart and an analysis of the index chart. So, what's the lesson that I'm learning? Unfortunately, and this is what pisses me off, it's not a new lesson for me. It's a lesson that I've learned too many times over the course of my career, which is follow your pre-market analysis. Don't get overly focused on the minutia of an individual trade at risk of the big picture of a great start to a trading month and a great start to a trading year that I'm actually having. So just a really poor job, I think. And I don't mind learning something from taking a loss. I do mind like relearning lessons that I already know. I've been in this business and trading for way too long to repeat mistakes and learn lessons that I already know. But you guys hopefully can learn from it. And the bottom line is, again, the pre-market analysis is always everything to me. And that's why it's important to get an early start. It's important to do your research. It's important to build out your game plans. When I follow my pre-market research, I tend to do really well. And when I don't, then I don't. So, just kind of is what it is. At this point, I did decide to swing some Apple long just because I do think that the market overall is bullish, even though Apple is really relatively weak. Apple is a little bit tricky here because it's one of the biggest down days that Apple has had in a long time. Hell of a day for me to trade Apple long for the first time in a while on like the biggest red candle that I can find as I just roughly eyeball the stock here. But it's now really extended the downside for how Apple typically trades. But the flip side of it is it's only a day one. Oh, there you go. Thanks, Pat. Apple drops 4%, biggest single day fall since August 2024. So yeah, absolute smoke show on the downside in Apple. And again, it's only a day one. This thing, and this is what I said at one point when we were chatting more towards the close, this thing could easily trade to 223 tomorrow, especially if the market's not supportive of it. But I am broadly still bullish on the market. I do think that today was a needed digestion day of this up move. So I do think that there will be an overall underlying bid to the market that will be on the side of the longs that I have on. But could the SPYs pull back to 588, 587 tomorrow and still be okay? Yeah, they could. And if Apple does that, if the market does that and Apple is relatively weak again tomorrow, easily could trade down to 223, if not below that. And then that's probably honestly the real buying opportunity. But for me, I'll just be in a pretty crappy spot at that point, trying to figure out how to manage a sizable loss. So yeah, that's that. I think that the trade of the day today was the Uber long. Shout out to Josh on this one. I had looked at this Uber chart, really liked it, wanted to mention it to the team in the meeting this morning, and then forgot about it. And then Josh mentioned it off of some news that came out from Goldman. So that put the stock in play. With a good-looking chart, so it didn't need necessarily to have the market, and it was just a really good long trade. So Uber ended up as one of my better names of the day, but it's the win on that is like I don't know, a 20th of what I'm down in Apple. So is what it is. That pretty much covers everything that I've got on my end. Happy to answer any questions that anybody has, like always. It's not always sunshine and rainbows. Not seeing anything in the VTF for the moment. Popping over to the YouTube. If I was aggressive like you were and took similar losses as well, and your CPT, I don't know what CPT stands for. Does that mean I'm CPT squared? I think it's a joke question, and I hope it's a compliment, but I don't know what CPT stands for. In all seriousness, consolidation days are still the toughest days. I agree. A consistently profitable trader. Got you. Thank you. In all seriousness, consolidation days are still the toughest days. I'm trying to keep a playbook tracking these, but they're deceptive. It's an arduous task to differentiate breakouts and fakeouts. So I agree with you. Consolidation days are the most difficult days to trade. The key is to do good enough research to identify when there is a higher probability of being a consolidation day before the market even opens versus a higher probability of getting some degree of continuation or trend. And again, in the morning meeting today, I presented that today was most likely going to be a choppy consolidation day. So as you're saying here, Kevin, if consolidation days are the toughest of days to trade, and you recognize ahead of time before the market even opens that today's probably going to be a really difficult day to trade, what does that mean? It means trade much less. Take a step back. Don't force things. Don't trade things that are related to the indexes. Only trade things that are really in play because they have specific news that will lower their correlation in the market. That's the key. I really think the key is to just identify the probability of what type of trading session you're going to have before the session even happens, and then obviously as the session is underway, you can adjust based on the new evidence as it presents itself. But all the evidence from the intraday price action today, I felt just further confirmed what was already my suspicion based on the pre-market, that today was most likely going to be a consolidation day. So hope that helps, Kevin. From Apex Joy, how many weeks left for those quantum names before they're game over? I don't know. The quantum stocks held in really well today overall. I came in short Ion Q still from yesterday. I fully liquidated that position into this low. I actually got out at 36.26. The low of the day is 36.13, so that was a pretty good closeout of that position. And then I said I only want to really get back involved in these if they really extend up. And they just never really did that. I guess Ion Q is starting to get close into the close to an area where I might consider to reshort it. The real one that I was watching today was to see if RGTI could get above 12, where I might start to build into a short. But I just want to repeat what I've been saying on a number of occasions now when it comes to these quantum stocks, is at certain points, whenever it comes to these heavily in play names, it just happens to be the quantum ones this time around, there is an incredible opportunity to make a lot of money. There was incredible opportunity on the short side, and then there was really good opportunity on the long side. You got to be very careful over trading these stocks when they're in more difficult spots. And I think that right now it's in a more difficult spot. If you really think that these things are worthless, yeah, you could try to look for a lower high to come into this equilibrium area and be a little bit more aggressive than I am and be shorting this RGTI in this zone, looking for a move back down to lows or to new lows. For me, I don't mind if I miss that trade if it goes without me. I would rather be involved. I'd rather be reshorting this when those people who are shorting this now are in pain. Which means for me, even just beginning to look at it when it's back above 12, because that's been the consistently better trades for me in these things. So while they're in here now, and I watched this RGT a lot today, even though I didn't actually trade it. And yeah, there are points where I was like, oh man, I'm missing the move and I could be short. And then when it snapped back, I was like, oh, I'm so smart that I'm not short this stock yet because look how well it snapped back. It looks like it's going higher. Yeah, that's just emotion. We want to not trade on emotion. We want to trade on substantial technical setups at the right points and understanding our extension and things like that. And the bottom line is that this action, going back to what Kevin was just saying about he was talking about the market when it was about how consolidation days are tougher. This is just a consolidation day, basically, in these things, and it's like a neutral consolidation in here. This consolidation in this RGTI, I'm just talking pure technicals. I still personally believe they belong much lower. We're talking about the pure technicals. This consolidation in this area, I kind of feel like has equal probability of breaking up as it does down. I would not be surprised at all to see RGTI retest $14 at a certain point or even $15 and then maybe create a bigger picture lower high up there that fades back down. I also would not be surprised in the same breath to see it fade down off this $11 area back down to $6, $7, $8. So to me, that's a coin toss at this point, technically at least. So I'm just waiting for the bigger setup to come in where I can have more conviction on the trade, and then I'll potentially get back involved. And from Cyril, is today for the Qs a day one? I would not consider it a day one. I would consider today, even though we're getting smoked after hours, huh? Qs are down $1 after hours. I would consider today, and I think this daily candle is a little bit deceptive because now it's including some after hours action, which maybe we should be including. But I would consider today to be a consolidation day and not a day one down. We didn't even break yesterday's low. There's no engulfing nature of this candle or anything like that. Could this market resume its bearishness? Yeah, it could, but I'm not turning back to a bearish thought process on the Qs until and unless I see them holding below 510. That's what I need to see. And then I'll go back to the opposite of what I just said. This market is not a dip buying market. This is a market where we go back into leaning and erring to the side of being short and selling reps. Thanks for the questions. Back over to the VTF from Varun. When will Netflix split and go to 1,000? I don't know. You're asking me about Netflix a couple days in a row, but Netflix looks like crap. So I didn't like Netflix when you asked me about it yesterday. I don't like it now. I don't think this is one of the ones you want to go after. It's a worse looking chart compared to some of the others. Netflix is almost as bad looking as Apple to me. Not as bad, but almost as bad. It's just not what I want to be involved in. Delta. Yeah, Delta does look good if it continues to hold and consolidate in there. I know that LUV got downgraded this morning, but they brought it back up. That's interesting to see. Yeah, Delta looks great. Continuing to hold here. Question from Reese. How much of your portfolio are you allocating to each trade typically? It's a hard... I would rather answer that question not about me directly, but more about like what I kind of think the right thing to do is for most traders. I like the idea of risking, depending on how aggressive you want to be, somewhere between 3 as a maximum loss for an entire day's worth of trading, like ideally probably 3% of your portfolio. If you're aggressive, maybe as much as 5%. So let's say 3%. So that becomes your maximum total loss for the day of all of the trades that you take combined. And then you break that down into the individual trades that you have. So if 3% is the total loss for the day, you are probably going to divide that into giving yourself enough room for... It depends on the risk skew of the letter grade of the trade that you're getting involved in, but I would say you're giving yourself enough room to be able to take 3 to 5 trades on an average day. So that would then mean, to directly answer your question, that how much of your portfolio are you allocating towards each trade on average? Probably 1% or a little less is what I would suggest from there. Um, and then you can do your own numbers on that. But then I think that the concept of risk skew is really important. Where, as an like, basically what risk skew is, what it means is when you not every trade is created equal. So trades that have a higher probability of success and a higher risk reward potential are trades that you want to risk more in, and then trades that aren't as good are trades that you want to risk less in. So in theory, there could be a day where you see this ultimate A plus incredible trade, and you're willing to risk your entire day in that one trade, and you risk that entire 3% of your portfolio in one trade. That should be pretty rare. More often, you're giving yourself 3 to 5 trades in a day where if all 3 or all 5 of those trades just 100% fail on you one after the next, then you should just shut down shop for the day. To me, that doesn't mean turn the computer off and go home. To me, that means just not pressing the buttons, but continuing to research and work and study charts and communicate with the team and try to find ideas, even if you don't take them yourself. So, yeah. Yes, I'm an Apple. Already went through it in detail. So, if you want to catch up on that, you can just watch the rewatch on the YouTube. You always keep something even if it keeps ripping against you? No, I don't. What's the game plan? Do you have some indicators, other factors that get you out for good? Or I just feel like you missed the beginning of the meeting, so I'm just gonna have you circle back to watch the YouTube rerun, because I already went over a lot of that in detail. From David, I feel like the IWM had a normal rest day. Thoughts on the IWM? Yeah, the IWM was pretty relatively strong today. Held in great. So it looks good. I did mention that there is a possibility. I think I just said this yesterday, the day before yesterday, of Mag 7 underperformance and the rest of the stocks actually performing. So it'll be interesting to see if this becomes a trend of what we're seeing. There was really good relative strength there. On days like today, would you say traders try to focus more on small caps? Not necessarily. I think that you need to just have an understanding of relative strength and relative weakness, and focus on the relative strength for longs when you're in an environment that justifies longs, and focus on relative weakness for shorts when you're in an environment that justifies shorts. Sometimes that's going to be the small caps, like right now, where they're relatively strong. The IWM that was relatively strong, in which case that's what you want to focus on for your longs. And other times, that becomes the relatively weak area. Thanks, Bill. Cool. Anybody else have anything for today? I'm beat, so I don't mind wrapping this one up quicker. MDY. I don't know what this is. The mid-cap ETF, that's right. Yeah, held in great. Probably a decent breath day for a negative SPY day. What about Duolingo? Duolingo is very, very thin. I don't like trading it. Looks like it got pumped a little bit higher today just on some of the stuff that Pat was posting this morning about people taking Mandarin on Duolingo to be able to utilize the Redbox. Is that what it's called? Redbox app that people are looking at instead of TikTok. Spotify looks pretty good. I don't love today's shooting star candle in it, but I don't think it's the end of the world. It might need a little bit more time. But broadly, if this thing can continue to hold 480 and the moving averages can catch up, I think it looks pretty good. Thoughts on HPE from Tate also looks really good. Holding in really good. Holding in really well. Continuing higher. Not really a momentum stock. Not one that I would want to buy after 4 days up in a row. Just not how it trades. But if this thing could consolidate above 23 and give you a setup, maybe it's something you can look at for a swing trade for further continuation. All right. Yeah, Snow got mentioned by someone this morning. I don't remember who. Snow looks great above 170. Really good looking chart. Let's keep that one on the radar for this market. Gain some strength and continues. All right, OPEX tomorrow. It'll probably be another tricky day just because I feel like these huge OPEX days kind of always are a little bit trickier. So I'm looking forward to actually getting to Monday. Monday's closed. We're closed Monday. I'm looking forward to getting to Tuesday, where we're through OPEX and maybe this market can give a little cleaner picture technically. And Tuesday's last trading day of the VIX January cycle. Thanks, Bill. All right, have a great evening, everybody. See you all tomorrow.